Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Super excited for today's episode. Joining me again from across the pond over in Europe, I have Matthew. You can find him on Twitter at Matthew Invests. And I'm just going to let you go ahead and give yourself an introduction.
Hello, my name is Matthew. I was born in Russia in 2000, so I'm 22 years old. 10 years ago, my family moved to Switzerland, and I lived here ever since. A year ago, I became Swiss. Currently finishing my degree for political science, and 2 years I've been working in wealth management in an asset management firm in Geneva. We work with private clients with $1 million account and up. I'm responsible for client work, finding clients, interacting with them, and slowly but surely I'm getting into the wealth management part. I'm really interested in everything related to investing. My father, he's been a great inspiration for me. He's been in the financial markets before I was born, in fact, and he started trading stocks when USSR collapsed, when all the privatized enterprise, every single citizen had a stock, so he traded paper stocks. So he's been there since day one. And right now, I'm working at the firm as well as helping him with his business and looking forward to help him take it to a next level with my knowledge of French and English and connections in this country. I started a Twitter account to help people get into investing because, as someone who's been really in the investing, say, echo chamber ever since I was a kid, because my father's into it, I was shocked how little people know about money and investing, baffled that they are not even considering it, even though simple decisions and choices that can take you like 2 hours max can improve your financial situation by far. So I decided to take it to Twitter, help people get better at it, and monetize it as well. There
Yeah,
you go.
awesome. You mentioned French and English, and obviously you must speak Russian as well.
I speak Russian and Chinese as well. Yeah.
So four languages. Wow.
Yes. I love languages. Yeah. You get into the culture, into the mind of the people through languages. It's a pleasure to learn them. A great honor.
And in Switzerland, you must, pick up some German as well, because if I'm not mistaken, Switzerland is basically 3 languages, right? English, French, and German?
Correct. Uh, I don't like German. I don't know, just the way it sounds, because for me, languages, they're really all about aesthetic and how I feel when I talk. And German, it's really rough and grotesque. I don't enjoy it for some reason. And nothing wrong with German people or their language, it's just my personal belief. I think
Yeah,
in
German is
terms,
a very abrupt language,
yes, yes,
whereas, Cantonese and Mandarin, it almost sounds like you're singing when you speak.
yes, yes, yes. And I think my favorite is English, then Russian, then French, and Chinese. There you go. That's my rating.
Wow. So that definitely helps you in that wealth management atmosphere of these obviously wealthy people managing accounts over $1 million, and, you know, not everybody speaks English in the world, so just being able to communicate in other languages has to help you immensely.
Yeah. Certainly. Um, I don't do as much wealth management for rich clients. I help. I don't take over accounts. I don't have that experience yet. It takes years of practice to get into it really, and I've been in it for 2 years really. I help, I accommodate, and I do minor things in wealth management. But I have so much to learn in the future. So much. And in
Yeah,
fact, in September I'll go to Netherlands to get a business and finance degree as well. So there's still a lot room to improvement.
yeah, we're always learning, lifelong learning, right? It's
Yeah,
just, keep learning no matter how young or old you are, just
yeah.
just
I
keep
think the
trying to better yourself.
Japanese, they have a word for that. It's like endless improvement. I forgot what it is, but there is one word for it. For your audience, check it out. It's a pretty beautiful concept. Japanese, they pick this one word for constant improvement throughout your life, from the day you're born till you die. Beautiful thing.
Yeah, amazing. So I'm kinda curious about your own, personal investing strategy, and obviously, you must have, a portfolio of your own, and I'm gonna obviously learn, some stuff here today as well because I'm not overly familiar with a lot of the, European and UK stocks. Obviously, I know some of them, the more popular ones, but, being in Canada, m obviously, we know all the big American companies, the Coca-Colas, the McDonald's, and etcetera.
Yeah.
So yeah,
I
let's
almost
just
Yeah,
Sorry?
I own McDonald's. Yeah, yeah.
Yeah, okay.
Not all of it, just little bit.
Yeah.
Yeah.
Right. So yeah, let's just dive into sort of like what you have in your portfolio, different sectors, different companies, wherever
Right.
you want to start.
I knew you were gonna ask that, so I'm gonna pull up a sheet about it. I have like a whole spreadsheet about it. So it is really connected to what we are offering to our clients. So I just copied whatever we are offering. But to be frank, I have less than $1 million being 22 years old. But that's soon going to change. But nevertheless, I copied that strategy more or less. I'll be glad to share it with you. So the first strategy is we call it a renting strategy. It's 60% bonds and 40% real estate. And the concept was that if you have, say, $1 million or less, it doesn't make sense to buy individual bonds because if you really want to make money from them, you'll buy four or five for $1 million to fully optimize it to give the returns that you want. But the problem is that if one out of these five bonds goes down, 20% of your equity is under risk. So instead, we're buying ETFs of bonds where there's as much as 500 ETFs, as much as 500 bonds in the ETF.
Right.
It mitigates risk, and because there's so many different bonds in ETF, you're getting paid a monthly coupon. And the bond ETFs that we buy are usually by Blackstone, BlackRock. I keep saying Blackstone.
Yeah.
BlackRock, BlackRock ETFs, iShares. Have a look. They have a variety of different bond choices. And then the real estate part of it is rates. Again, for $1 million, at least in Switzerland, you're not going to buy any decent real estate. You're going to buy something half quality that's not going to appreciate in the future. So we also have a variety of rates that are related to industry, to private real estate firms, to uh, government related as well. So you again, everything is diversified and spread out. You're not betting everything on that one apartment you're buying or on that one rate you're buying. So we have a variety of rates
Right.
and variety of bond ETFs, and it's, I mean, what must happen for a bond ETF to go down? Something really terrible because it's 500 bonds in it. One bond can go down, it's okay. But if a lot of bonds go down, something really, really bad has to happen with our economy. And if it does take place, the decline of the bond ETF will be the last of your concerns. So very spread out. So that's one strategy that I dedicate. It takes most of my portfolio right now because we are in the volatile times in the market and it's better to have a safe bet. And then the other strategy, let me pull it up. It's called global market strategy, and that one is more risky, but it gives returns of 10 to 20% a year. And just before I open it, a funny paradox. When we work with some of our clients and we tell them that it's 10 to 20%, they're not ready to hear such big returns and they're really suspicious about it because when they see big returns, they assume that it's very, very risky, which everyone has a different perception of risk. I don't think it is that risky. And over years, it has proven to work. We have the Invesco QQQ Trust. It's top tech companies in NASDAQ. iShares Semiconductor, one egg gold miners. It's a good way to hedge. Gold has proven to be really, really good over the last since the beginning of the year. Pretty much, it has proven to be a safe bet. Many investors went to it. Then there is the Chinese Crane iShares ETF. It's a semiconductor ETF in China, which is a hell of a roller coaster. But if you hold it in the long run, it grows. The Chinese stock market, don't get me started. It's like a whole different gameplay. It's nothing similar to US because there the government plays a big role.
Right.
All sorts of semiconductors. There's ETFs for major. There's an ETF for major companies in Brazil. It's more aggressive, more dynamic, and it brings higher returns. And there, I don't have that much invested in it yet. In fact, most of my portfolio is in cash right now because it has been rough lately. I have a little bit in bonds and real estate, that is bond ETFs and rates, but I'm not particularly keen on investing in more risky, more dynamic assets right now. It's every other month something's been happening this year. Every other
Yeah.
month something's been happening this year. And someone is clearly playing a game, obviously. So I'm just gonna wait till they finish.
Yeah,
But
it's
then,
definitely been quite the roller coaster. The even the end of 2022 and the first several
yeah,
months now of
yeah.
2023.
It's been
Um,
crazy. Yeah. I considered investing when the war with Ukraine started, which I'm against, obviously. Um, I considered investing in American like steel and American military companies, but then I thought to myself, my father always kept telling me that um, in investing and trading in the financial markets, there is the goddess or the karma goddess of
right.
financial markets, and even if you make money right there, right now, which the growth has been pretty crazy for Lockheed, it was something like 70% in 1 year, which is insane.
Hmm.
Um, the karma is going to get back to you, and you're going to lose it somewhere else. So I decided not to.
Yeah, understandable, understandable. You're very focused globally. Like you mentioned, China, Brazil,
Yeah.
obviously the U.S., and
Yeah.
I'm sure you have European exposure as well. So, do you think younger people your age, like early 20s, are really like you've grown up now in sort of the internet and you're connected globally. Like right now, I'm in Canada, you're in Switzerland. Like
It's
30
awesome.
years ago, there's no way we could have done this, but
Yeah.
today it's just normal, right? So, do you think people your generation can really identify with that global investment strategy?
Well, those who invest, probably yes, because younger people, they're more global minded. But the problem is not that many young people invest to begin with. And we would think that with all the internet and the connectivity that we have, young people will have all this information to learn about investing and wealth management and personal finance, that they'll do so much better than their predecessors. But most of young people, unfortunately, spend time scrolling through the endless feed, indulging in semi-pornographic content on Instagram and degeneracy. Unfortunately, oh yeah, I've been losing my. Can I curse on this podcast, or
Pardon me?
can I curse on this podcast like a little bit, not too rough?
A little bit's okay. We try to keep it somewhat
Okay.
family friendly.
I've been losing my cool lately, trying to make content on Instagram and Twitter about investing because people just don't care. You give them information that will improve their life significantly. Just put a little bit of effort, just a little bit, little grain of effort. Put it in. They're like, nah, 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 nah. And then they're like, off. We hate billionaires. They exploit us, and then they don't spend even a few hours to learn about investing. Which
Right.
I calculated for a person to start investing from zero. I I freak out when I do this because it angers me. But it's 5 minutes to download an app. You go top investing apps in US. So then you download it. That's 5 minutes. Then you have to sign up to an app. It's 15 minutes, and then you wait a day for them to confirm your identity. And then you need to read like for 2 hours max. You go to Investopedia, you type in how to start investing. They lay everything out for you. They say there is stocks, there is bonds, there is ETFs, this, and that. ETFs are less risky, stocks are more risky. Then you go and type in top ETFs in the world or US, whatever you want, and you pick one, you connect your card, you buy it. Boom. The whole process is 3 hours, and people are like, nah, no, I'll scroll on TikTok for I don't know 2 hours a day, and then say I have no time. I have no time for that nonsense. Investing, schminvesting. Yeah.
Yeah, I definitely I think we all fall into that trap a little bit, like endlessly scrolling
Yep.
on Instagram uh or TikTok or even Facebook or whatever.
Yep.
I think Twitter, you can really focus on your niche and what you want to have
Yep.
fed to you, and you can really, the FinTwit and DivTwit communities are really great for
Yep.
people supporting each other and providing information. But
Yep.
same thing, if you're not in that, you can spend endless hours scrolling on Twitter as well, just with
Yep.
nonsense, right? So,
Definitely. I agree. And you're the example. I just randomly met you in FinTwit, and here we are talking. Yeah, I was pleasantly surprised with Twitter. I joined it seriously. I started using it seriously at the beginning of the year. And it was so refreshing comparing to other social media apps. There is no sexualization, at least at what I'm looking for at Twitter.
yeah,
Uh, People are adequate. Twitter has a bad rap for a lot of cursing and arguing, discussing in politics. I have not
yeah.
encountered it whatsoever. Maybe have a nice echo chamber in Twitter, but I haven't. And you're an example of that, Dividend Dave. That's a cool name, Dividend Dave.
Well, thank you. Yeah, yeah. Twitter fights are quite the spectacle. If you ever don't get involved in one, but if you ever get tagged in one and just watch it unfold, it can be fun.
I'm yet to have that. My account is not that big yet.
Yeah, no, you'll keep growing for sure. You have great content on your Twitter feed as well, so it won't be long until you gain thousands of followers as well. So
Yeah, that would be nice. And I want to ask you a question back because on
sure.
every great podcast, the guest also asks the questions, and people in comments are like, "Oh, this guy is so humble. He also asks the host." You call yourself Dividend Dave. Tell me about your investing journey and what role do dividends play in it?
Yeah, so it's a really long story, and so for the full long story, I've been a guest on other podcasts, the One Penny podcast with Harris and Green Candle IT podcast with Brandon, and I've gone into greater depth there. And actually, I was on Newcomer Investors podcast as well. And by the end of it, he asked me the question. I'm like, no, we have to do another episode because that's like a whole hour of me just telling that whole journey. But so
Uh,
basically, I started out quite young as well, but I made all the mistakes along the way, all of them, every single one.
Good, because you're not making them now.
And so basically, just in the last 3 or 4 years, I really focused on the dividend strategy and using those dividend payments to reinvest. And you mentioned a free app on your phone. So my free app in Canada, it doesn't have an automatic drip, which I actually kind of like because that means okay, let's just say I've got $100 in dividends this month. I can allocate that to whatever other company I want, and I can scroll through my uh, portfolio and say, oh, I can dollar cost average down on this one because So yeah, that's just where I've gotten to in life. Obviously, I'm quite a bit older than you, and just the dividend investing strategy and dividend growth strategy is, for me personally, again, not financial advice, but it just seems like a much safer route. Maybe a little bit slower. I know a lot of younger people are looking at growth stocks, which is great. Um, but I'm not so much looking at growth stocks anymore. I've played that penny stock game and I've never won, not once.
Yeah.
So yeah, it's just all a matter of feeling comfortable, looking at those blue chip companies. I'm not sure how familiar you are with the Canadian market, but like the Canadian banks, the Canadian telecoms, the Canadian energy sector,
Mhm.
um, Canadian REITs. You mentioned real estate. REITs are one of my favorite. Every REIT in Canada that I have, and everyone that I know of, pays a monthly dividend, which I really appreciate. I get it. I understand 5% is 5%, whether it's paid quarterly or monthly, but it's just, something psychological when you see
Yeah.
that arrive in your account every 30 days or so. So, um, yeah, I guess, did that answer some of your question?
Yes, of course, certainly did. And I wonder, how old are you, Dave?
Take a guess.
Okay, I don't. You have a little gray hair on your beard, so I'd say something between 46 and 51.
I turn, uh, I turn 50 in May.
Good, good.
Yeah, you're
See, it was
bang
like
on the demographic there.
I gave you 4 years of use just to be polite, you know,
Yeah.
as well. But I still kind of found my range.
Yeah,
No,
no.
that's pretty awesome. And you said you made a lot of mistakes. I think it's fine. And all of these mistakes that you made have brought you to the strategy that you have now, that you're perfectly comfortable with, that will work out for you. So I think it's great. Uh, Definitely dollar cost averaging and more slower strategies. They're a lot more emotionless. It's just
Yeah.
a simple method and algorithm that you follow, and it's a lot easier to do. Whereas when you start reading the news and start to pretend like you are, I don't know, Wolf of Wall Street, scheming and planning, analyzing the worldwide economic situation, no, yeah, it never ends well. I don't do it. The best investing is when you invested and you forgot about it, and then you have a notification in your app, invest, and then you
Yeah.
invest again. Or even better, you just do automatic payments from your card. That's pretty nice as well. No, but then again, I'm speaking from a position where my father has been in industry, and the book Rich Dad Poor Dad. I
Yes.
was immensely lucky to be born with rich dad mindset dad and mother as well. So I'm empathetic to people of my age who are not aware about it, because if they start investing now, their financial situation in the future, in 10, 20, 30 years of time, will be significantly better as opposed to if they didn't.
Oh yeah, definitely, definitely. obviously, time is that big one. And when you start at, your age, 20, early 20s, even if you start in your late 20s, even early 30s, you have plenty of time
Yeah.
for that
Yeah.
compounding effect to take place. And
Yeah.
for, over that 20-year period, the stock market always goes up over 20 years. Sure, it goes up and down and fluctuates in between.
Yeah.
But if you look back at 2003 to 2023, over that 20-year time span, all the markets have gone up, right?
Yes. Huge. Indeed. Definitely.
Which is nice because, you get that capital appreciation on whatever you're invested in. But
Mhm.
again, if you're investing into the dividend strategy, 20 years of of that monthly or quarterly dividend hitting your account and
Yeah.
investing it back into
Yeah.
whether you have drip or manual reinvestments is just, keep building and as the saying goes on Twitter, brick by brick.
Yes. Brick by brick. Indeed. Yeah. I noticed that because investing, it's so simple in a hard way that the hardest part about it is keeping it simple. And all the content on Twitter is the same. And at first I was, oh, why can they bring something new to the table? And then I started making it and I said exactly what everyone else has said. So
Yeah,
yeah,
just get started, pay yourself first, brick by brick, watch
yes,
that snowball grow, and you're like,
yeah,
everybody's saying the same thing. Well, the reason everybody's saying the same thing is because it works, right?
yeah, because it works and that's how it is exactly. And now I'm trying to figure out how to enhance that message with my personality and my authenticity. I hope I have one. And that's where I'm at right now. And I was going to ask you about dividends as well, because dividends, they can be a double-edged sword in a way that the issuers of stocks, the issuers of dividend, they use dividend as a marketing tool to convince you to buy their stock.
Right.
And there is this gentle balance between the value of the stock that you're purchasing and the dividend it gives, because sometimes dividend can be wonderful, but the value of the stock itself is not necessarily worthy. What's your take on it? What's your, how to say, what's your due diligence when you trying to pick a good dividend stock?
So again, the longevity and consistency. I look at the Canadian banks, and there's a tweet that I reference. It's from at Settling Nomads. I'm not sure if you follow that account, but I've referenced this tweet endless amount of times. So shout out again to at Settling Nomads. But the tweet basically breaks down Canadian banks paying a dividend. I believe it was Bank of Montreal since 1829, Bank of Nova Scotia since 1833. So a
Wow,
couple of banks are coming up on 200-year anniversaries of paying dividends.
pretty
Um,
solid.
all of the big five are over 150 years of paying. The big five banks are in Canada are over 150 years. Now, obviously, they haven't had a dividend increase every single year for 150 to 200 years, but I look at that longevity and consistency going, okay, well, they're obviously solid companies, solid investments. And again, sure, they're gonna fluctuate the price up and down over the course of a day, a week, a month, a year.
Yeah, yeah, of course, yeah.
But over 20 years, I'm quite confident they're all going to, increase somewhat
Your
significantly.
yeah, your hedge is the prosperity of the glorious nation of Canada.
That is part of it too, as well. Yeah.
Yeah,
I,
yeah. And that smart man who started buying those dividend stocks back in 1850 or whichever year you said, I wonder
1829 was the first one.
when you 1829. That's Napoleon was still alive, I think, in 1829. That's crazy. Or yeah, I think he was still alive in 1821. Then
Well, the
29.
really crazy part is Canada didn't even become a country until 1867.
But the Canadian bank still issued dividends.
Correct.
Yeah, I know almost nothing about Canada. I don't know. I know a lot about US because I studied its history thoroughly,
Yep.
but Canada I know really little about it. And let's say, what's the difference between in the mindset and investing and relationship to money between America and Canada? If you have an answer like that.
Uh, I probably don't have an accurate answer because you'd have to compare my answer to an American's answer. But
Yeah,
for the most part, I would think it's very similar. North America, we are very similar cultures. Obviously, there is many differences between Canada and the US.
yeah,
But there's also many similarities. We've, developed this continent over the last 200, 300 years.
yeah.
Sorry to all of our indigenous friends that we invaded, but I definitely don't want to get this into a political statement at all, but I would think
One
the
Canadian apologized right here when talked about it. Yeah, that's
yeah.
awesome.
um, I would think the mindset, and again, it depends on who you're talking to, right? Like all of the Canadians and Americans in the DivTwit and FinTwit communities, well, obviously we have very similar mindsets because we're investing, we're looking for returns, whether those are returns on capital, on that capital appreciation, or returns through that dividend payment. Whereas, like you mentioned, the other percentage of the population that's just out there scrolling on Instagram that doesn't think about their investments, well, yeah, those people obviously have a very different mindset. So,
Yes, yes, totally. I think that's most of people who scroll through TikTok, unfortunately. And here we are trying to make the world a better place, Dave. I'll drink some tea for that.
yeah, thank you.
Okay, let's throw in some fuel in the fire. What's your take on Bitcoin and cryptocurrencies?
uh, I like the concept, and I don't think it's going anywhere. I do hold probably still several different altcoins, as well as I don't even say I hold Bitcoin. I say I hold some Satoshis. I have a few Satoshis, and you know, Bitcoin very similar to the market. When Bitcoin was at what that all-time high, I think it was the fall of
Six.
2021, around 67
Yeah.
or 68,000 US dollars, and it was like that meme where it was shut up and take my money, right? Everybody wanted to buy Bitcoin at the all-time high. Then Bitcoin drops to 16,000 or whatever it was at the low there a year or so ago.
Yep.
And
Yep.
suddenly nobody wants it. And it's like, and right now with Bitcoin slowly creeping back up, it's somewhere around 30,000 US dollars right now. People are
Yep.
starting to take notice again. So, it's a very weird animal. I do see the use case for cryptocurrency, especially in the again, going back to the global community, being able to transfer money very easily from Canada to Switzerland, from Mexico to Brazil, from Australia to wherever, right? Whereas trying to trying to transfer actual real funds, it's very difficult. Um, I actually saw a tweet. I'm not sure if you follow him. His Twitter handle is at drunk dividends. He says, "I get drunk. I get drunk for a living." He started a winery in Manitoba at like the age of 18, and at 25, he's got $1 million business. And
Uh, wow.
yeah, so basically, he had a tweet like, "Have you ever tried to transfer $100,000? The bank looks at you like you're a criminal, but with
Yep.
crypto, you can just do it, no questions asked, right?" So, I
Yep.
definitely do see the use case for crypto, and I do see wider adoption in the future, and again, especially your generation being familiar with more technology and digital products. So, I'm going to throw the same question back to you. What are your thoughts on crypto?
Um, I'm really conflicted about it because the technology is great, but what is happening to it, I'm not sure it is how it was intended by the founders of crypto and Bitcoin and cryptography. Because, I mean, when you see such fluctuations like that, clearly someone is playing a game behind it. Um, there's few major players behind Bitcoin. I don't know who they are. It's definitely major hedge funds, big asset managers who hold big pieces of it, who speculate, who fund media to produce certain messages about it. And what was supposed to be a decentralized way of sending money, of making transactions, it became decentralized. I'll make an analogy of political science. So Bitcoin's goal was to get rid of the central piece, the government. We get rid of the
Right.
government. So there's no government, and what happened is a bunch of landlords came in, like five or four, who are just tearing apart, squeezing and pumping the price of Bitcoin, and people are losing even more money as opposed to if they had it in a centralized currency. So right now it's really volatile. I mean, you can have it no more than 10 to 15. I don't recommend people to have 10 to 15% of their portfolio more than that in crypto, but you can just put it and wait for like 10 years and see what happens with it. Uh, but use case wise, I think it's completely different to investing in it, because if you invest more likely than not into cryptocurrency, into a speculative part of it. And then there's a whole element of investing in a business use case, which is completely different. And frankly, I'm not an expert in Web3 and all that. So I will not give my poor opinion about it. Yeah.
Fair enough.
You know, there is hope for it, but I don't have a feeling that those who are in power of the financial sectors will just let it be. It will be used in some one way or another.
Yeah, fair enough. Fair enough. Getting back to more traditional investing, and so you mentioned a few different things off the top, ETFs and REITs, etc. And I hope this isn't a touchy subject for you because I'm really curious about energy, and obviously we've seen the energy crisis in Europe this last year, which
Oh,
is it's
perfect.
driven prices up here as well, right? And it's
I love it.
ridiculous.
Go on. Ask that question. I love it. Can't wait.
Okay,
Yeah.
I'll just go for it. I'll let you speak to the whole energy crisis in Europe,
Yeah.
and obviously Russia is a part of that, and you being originally Russian,
Yep.
let's get all of your thoughts.
Yeah.
And again, I don't want to turn this into a political podcast, but
Don't worry. Don't worry. I did political science major. I don't like talking about politics. So because it just all comes down to, well, this player's interest is this, so it does that, and that player's interest is this and does that. Um, So I'll start the story with the fact that I went to Russia in 2021 to visit my grandma and my friends, and then I went to Ukraine in November 2021, 3 months before the war, to see my friends as well. So my heart belongs to the people of both countries, but I'm more sympathetic and sorry for people in Ukraine, obviously. And the current energy crisis, it's like so many players are playing their own game right now. It's absolutely crazy, and it's interesting to see that. And one point I want to make in the beginning, that everyone, including me, thought that Russia will go to economic ruin when the war started. Everyone will sanction it. All the financial operations will stop. It's over. Back to the USSR, like the song goes. And what ended up happening is that Russian economy got really isolated, and because all the Russians abroad, I'm Swiss, so inshallah I wasn't sanctioned, but all the Russians abroad, their money was sanctioned, so all the money, the billions and billions, had to come back to Russia. And all that money, where do you put it? You invest it in the stock market. So Russian stock market has been like showing growth since the beginning of the year, which is absolutely insane if you think about it. Uh, Whereas American banks, there's like 5 banks that have collapsed, including Silicon Valley Bank. The Credit Suisse, the second biggest asset manager in Switzerland, has failed. And when you see Russia like sanctioned by the whole world and the stock market is growing, it's absolutely baffling. But going back to the energy, because when I talk about something like this, I have a mind map in my head, and there's major players. That's United States, obviously, Russia, Ukraine, Europe, led by Germany and France, India, and Middle East. All the major energy providers. Ukraine is the cause of the energy crisis. US wants Europe to refuse Russian energy to put pressure on Russia. Europe wants to fight back because their population is, I mean, they're
dependent
discontent
on
about the
Russian.
rising prices. Yeah, they're discontent about the rising prices, and the Russia is slowly losing money because they have to sell energy cheaper to China and India. Um, you see, it's like a really complicated organism that is evolving in front of us right now. And where is it going to lead us? I have no idea. But what I know is that when Russians couldn't sell any oil to Europe, or not as much, they started selling it to Middle East, China, and India. So they're making slightly less money right now, but uh, it's nearly not as bad as people think.
Interesting.
Europe, Europe, they're paying super high prices. There's political instability. People are discontent. I mean, we're seeing protests with Macron, President Macron, raising the pension age to 65 from 62, I think. So there's a lot of pressure in Europe. United States is lobbying, pressuring Europe to, refuse Russian energy. It's a complicated thing, and frankly, I have no idea what's going to happen. Like,
Yeah,
yeah,
well,
yeah,
if we
every
could
month.
predict the future, right?
Yeah,
If
what?
we could predict the future, we
Predict the future, because when this whole Russian Ukrainian war started, when Russia invaded, I was a political science student, and I thought to myself, okay, I'll listen to the smartest people in the field about it. And maybe you've heard about Noam Chomsky.
He's
Uh,
Canadian, I think.
oh, really?
I think he
Perhaps
is. I had somebody in the comments fact check me on that one.
Noam Chomsky, and he's like one of the most influential minds in political science of the 20th century. And I listened to podcasts of him and Lex Fridman, and he said, "I don't know what's going to happen." So I thought, okay, I'm not going to say anything after that. If he doesn't know, I don't know. But what I know, who profits the most from it right now? It's China, because they have Russian energy cheaper, and Russia is more dependent on China. It's India, because they have their energy cheaper, and Middle East. Those are the biggest profiteers of the current energy crisis. Well, it's not a crisis for them. For them, it's a birthday party. So there you go.
Right. Yeah. Very interesting take. Very knowledgeable take too of how, like you said, it's an organism, and it's with all these different moving parts, and of course we have no idea how it's going to play out in
Yeah,
whether it's the next month, 3 months, 6 months, year. We don't know. If nobody can
yep,
predict the future, right? So
yep,
that's
yep. It's
interesting.
what's the expression in English? It's the is it the flop of the butterfly wing. What's the correct way to say it? You know what I mean? The butterfly effect. There you go. The
Yeah, the
butterfly effect.
butterfly effect. Yeah.
The butterfly effect. Maybe something is happening right now as I'm talking to you, Dave, that will completely profoundly influence the way things unfold, and we're not even aware of that. But what I can tell you, which is a really interesting thing, if you check in the S&P chart, uh, it has crashed the day before the war, the day before the war started. Not when the war started and everyone found out about it, but the day before. And this, yeah, check it out. It's
Yeah,
pretty
that
interesting.
makes you go, what
Exactly.
somebody knew something, right?
Yes, exactly. And or maybe not, because I keep referencing my dad because, well, he's my mentor, my master. But he said this interesting thing, that the stock market chart, and when you study finance, you also learn that it represents the cumulative emotion of everyone who is participating in the market. And maybe as an individual, you're not sure that the war is coming, but as a total organism, as a total being of all the people who invest, subconsciously or not, we're feeling that something is about to happen.
Right.
And or maybe just a bunch of people on Wall Street were like, well, time to make money. I don't know, maybe both.
Yeah. No, I the stock market is very driven by fear and excitement, right?
Yeah,
Like it
fear and excitement, those are the big ones. And those are the last things you should have if you really want to invest.
Yeah,
Fear and
I
excitement.
agreed, right? Like try to
Yeah,
take that
the wrong.
emotion out and make it as
Yeah,
boring as possible, and again,
boring.
that's why I go back to the
Yeah,
dividend investing strategy and just
yeah,
these blue chip companies that have been around for 50, 60, 100, close to 200 years, whatever, right? And you
yeah,
just really try to take that emotion, that emotional roller coaster, that fear and excitement, just take it out of the equation. And uh, another saying we have on Twitter is that sleep well at night.
yeah,
You just don't worry about things, right?
yeah, yeah. Making investing not sexy is probably the right way to put it. Yeah, because people, they watch The Big Short, Wall Street with Charlie Sheen.
The Wolf of Wall Street.
Yeah, and they think to myself, I'll I'll become an investor right now, and they make every single step. They do it the wrong way. Yeah, definitely, it shouldn't be sexy. I agree. And an interesting point I wanted to bring up with you as well. People talk about Bitcoin all the time, but I wonder to myself, uh, why is not everyone talking about Apple stock or Google stock? Because in the long run, they bring pretty good profits. And it's strange to me that people invest in Bitcoin before they invest in Google or Amazon or Apple.
Right,
Apple, which is like one of the most successful companies in the history of capitalism. So that's why I say no more than 10% of your equity in crypto. Because every time Bitcoin goes up, you have like these people that are supremely confident about Bitcoin. Uh, that just when Bitcoin goes up $100, Bitcoin to the moon. Bitcoin goes down, they're quiet. Bitcoin goes up again, they're like, man, I'm all into Bitcoin. I don't
yeah,
know what about you, Bitcoin all the way. Bitcoin goes down, they're quiet. There's way too many people like that on Twitter, and nobody's talking about to the fact that Bitcoin hasn't rebounded to its low since 2 years. So technically, in the span of 2 years, it's still falling.
right.
But and how can you invest in something that's been falling for 2 years. I'm not sure about that. Yeah.
That made me actually think about gold too, because people don't talk about gold
Yep.
ever, right? People, like you said, there's tons of talk about Bitcoin. Obviously, on Twitter in the Dividend and FinTwit communities, there's plenty of talk about Apple, Microsoft, Amazon, Google, McDonald's, Coca Cola, and like all of the big, huge American global companies. Um, but gold used to be the standard, right? Gold was well, it's
Yep.
literally called the gold standard. So whereas today, and even on like when I'm driving home from work, the business news just happens to come on at that time of day. And sure, they give the price of gold, whether it's up or down for that day. An ounce of gold is worth X amount of dollars.
Yep.
And that's about it. I hear that's all you hear about it. Other than that, it's very, very quiet.
Yeah, gold is not fun. People don't have fun investing in gold. They want something flashy and sexy that might prove them 50% of profits. You invest in that, you'll be rich. People want that. They don't want investing in gold. What are you talking about?
Yeah.
No, but I agree with you. Gold, if you look at the chart of the gold, ever since the gold futures has been traded on the stock market, it's been up in the long run as well. So it's a solid hedge when the times are tough on the market. Right now, I talked to my dad about some clients. A lot of them hold their equity in cash, some of it, and in gold. Gold is a good option, definitely. And the gold standard, let's quiz me. It was abolished in 1971. Yeah, I hope
Okay.
I hope my historical knowledge was interesting. And I think something similar might happen in the future with digital currencies as well. So they'll completely make currency like in the air, make it a
Right.
concept, an abstract concept, because it's heading that way. They started a central bank in 1917 or something like that, during or before World War One. So money became more centralized, but then they abolished the golden standard because people can have a physical thing and they have control over their currency, and you cannot print more money because people have gold. So they abolished that, and now people at least have cash, something physical, and they still have leverage and sovereignty over their money. And the logical step is that the government, the Fed, or whoever will probably start implementing digital currencies. China might.
Yeah.
Yeah.
China's probably going to be one of the first to do it.
Yeah. Yeah.
So you mentioned a hedge. I'm assuming you mean a hedge against inflation, and I'm just curious, which would you rather hold for you personally? Which would you rather hold, Bitcoin or gold, for a hedge against inflation?
Um, well, if I'll hedge against inflation, my rule is no more than 10% of my equity in Bitcoin. So if I want to hedge my total portfolio, I wouldn't go with it. Um, Hedge against inflation, gold is pretty solid. If you grab the inflation and gold, gold has been performing pretty well. So I'll pick gold, obviously, not Bitcoin. I mean, putting a lot of equity in Bitcoin
Well, it is
last.
scary because it is so volatile, like you mentioned, right?
Exactly.
It goes up by $1,000 every, up or down by $1,000 every day. So
Yeah, yeah, because I speak Chinese a little bit and I have some friends in there and I can barely read the news and watch the videos and Telegram channels. There is factories in China, like a whole building of traders trading Bitcoin. Like imagine like a big office, like in Wolf of Wall Street, just a
right,
big ass office of people trading Bitcoin, and sometimes they dump it. And I saw like a video. There's like 40 people in the room, and there's like a countdown on the big screen, 3, 2, 1, and they all like press sell together. Like those factories exist. Like how can I trust it? Uh, at least with Apple, there is something physical, real
tangible, right?
in Bitcoin. That's the beauty of Bitcoin, that there's nothing physical to it. That's why you can speculate and pump it and squeeze it. But is it a good mentality for your life savings? I'm not sure.
Yeah, no, I agree. It kind of goes back, like, what is the intrinsic value of cryptocurrency? Like, you
Yeah,
can look at Apple and go, okay, iPhones, iPads, I'm
yeah,
like MacBooks, and the list
yeah,
goes on and on. So there's plenty of real, tangible, intrinsic value.
yeah.
What is the intrinsic value of cryptocurrency?
Supply and demand, baby. That's all it is, really. It's Bitcoin is like I saw one of your previous episodes. You're into hockey cards, and I know a little bit of the hockey history. I know that USSR and Canada played a lot, but other than that, but Bitcoin is kind of like hockey cards in a way. They become more expensive as more people want them, and you can use it as a means of exchange, just like
Right.
anything really. The thing with Bitcoin is that it's trackable and transparent. That's the only thing. But yeah,
Right.
do I trust it? I'm not sure. I thought to myself to create my own blockchain and use it just for myself and other clients to like have completely private transactions. Think about it. There's this your own blockchain that is between party A and party B only that you use for transactions. And then I thought to myself, that's pretty interesting. Say you have a client somewhere really far in a different jurisdiction in a different continent, and you have your own individual blockchain, and you just between each other for low fees. That's pretty interesting.
Yeah. That's an interesting concept. Do that. Get on it.
Yeah, no, learning slowly. I realized that as I'm 22 years old, a lot of people my age, including me, they want to do everything, and me, I get torn apart by this interest and that interest. Read this, check this out, participate in this startup, that startup, go on board for this project.
Yeah. Block out the noise.
Yeah, block out the noise. Now I just at work, I learn every day. Right now, I'm reading the history of the J.P. Morgan dynasty. It's like a thick book, and I'm just going slowly through the history of Anglo-Saxon finance and work with the wealth management company and help my dad. That's all I'm into. We should talk in 5 years of time. I have big goals for the next 5 years.
Yeah, definitely. Definitely. I'm going to quickly bring up your, you can find this link at, through your Twitter handle.
Awesome. Yeah.
And yeah, so you can schedule a 30-minute free coaching call with Matthew. So just go ahead and speak to what you're offering here.
Uh, Remember to that little monologue I had uh, saying that people don't know anything about investing. If you're starting out investing and you're not sure what app to download, um, where to start, what materials to read, what book to read, what website to read, just the general concept of investing, why stocks grow, what are the difference between stock and bond, between bond and ETF, which one is better. Uh, I give a free 30-minute call where I give you like this introductory view to how to start investing
A
and
broad overview.
yeah, a broad overview of how to start investing. And after those 30 minutes, you'll be more ahead than most of the people that you've ever met. There you go. Feel free to sign up. It's free.
Nice.
Yeah.
Yeah, that's awesome. And I hope that there's a lot of people your age contacting you. And again, because of sort of who I've met through this Twitter community of other investors, I've actually met quite a few younger people, and like whether some even teenagers, 20-year
Wow.
olds,
Good.
um, mid 20s, late 20s, early 30s, and obviously we're up to episode 70 on the Passive Income podcast, so I've had a wide spectrum of guests. The youngest being 18, I believe, up to the oldest. Obviously, I think I'm not sure if they were late 60s or even into their 70s, but and,
70s.
and everything in between.
Damn.
Yeah, so some of those older retired guests are fantastic because you get to hear like this is how they did it, right? And this is
Yeah.
you know some people that have retired at 38 years old, and right, so it's like interesting. Um,
And just briefly say, who's that guy who retired at 38? I'm just curious what.
there was a couple different ones. Oh, they're escaping me right now. They know who they are. It was a couple that I had on,
Uh,
and they're living like in Central America. It was they were 38 years old in 1991, and they've been living like the retired lifestyle for 30 years now.
wow. That's
Yeah.
pretty cool. That's goals right here. But sometimes I question it. That can be like the last global point that we can discuss. Given that you're 50 years old, that'll be really interesting to compare. On social media, all over the place, TikTok, Instagram, even Twitter, everyone says, retire by 30. Woo! So exciting. But I just wonder, what are you going to do with your life after that?
Yeah, no, actually, they had their story was great because they were still doing things like volunteering and doing, um, in their community. And I believe they were in Mexico. They had lived in several different countries throughout Central America, but they had done a fundraiser to build new tennis courts to help the community. So they were keeping active and definitely doing things, but doing things that they wanted to do on their time, on their terms, right? So
True, true. Maybe
another more recent guest I had was, I believe Nelson at Uproar Capital, his Twitter handle, and he's also just retired. More recently, like I believe the end of last year, at the age of 39 or 40. So, um, yeah, similar and same thing. Still finding things to do to keep themselves active and busy, and but again, doing it on his time, on his terms, which is which is that freedom everybody is talking about, right?
yeah. And one more question. For me, someone as young, whenever I talk to an older man who's smarter and more experienced than me, like yourself, I would always want to ask a question. Say, what would you say to a young man from 20 to 30? What's the period of 20 to 34? What's the period from 30 to 44?
So, either decade that you're in, the number one thing for investing is just get started. Um, I say just get on base. It's obviously a baseball reference. Just get on base. Get to first base. You don't have to try to hit a home run. Just get on base. So just get started. Whether you're 19, 22, 28, 32, 42, even, right? Like just get started. Um, and I think that's obviously the um, number one thing. But beyond that, through your 20s, this is not me saying this. This has been ingrained in me. Your 20s are to learn, continue learning. Obviously, you've grown up with an education through elementary school and secondary school and post secondary education. But continuing to learn through your 20s, and we even mentioned lifelong learning, but really learning more in your 20s, and then your 30s earning. Learn to earn sort of idea. Um, yeah, I guess that's my answer.
No, it's a great answer. Thank you for reinforcing what I already have in my head. All the older people told me the same thing, and it's great. I look forward to it because a lot of people in their 20s, they see all this demonstration of wealth on Instagram, and including myself, for someone who is not, stupid, but even subconsciously, it kind
Yeah,
of pushes me to like, come on, earn, man, go, find something, earn something, and it really fatigues you. Whereas you could have invested that energy into reading or networking or going to events. So I definitely resonate with that. I have to really slow myself down. I think for our generation, it's all about slowing down, whereas for yours, it was to go faster. I think for yours, it was all about more energy,
yeah.
go out there, try things. For us, it's like, no, no, come on, contain yourself, focus, execute. Definitely.
I think another hard thing too in that early 20 stage is when you compare yourself to that top 1% of that age group, and so I'm referring to, like, professional athletes or
Right.
actors and actresses that, you know obviously in Canada, it's hockey, in Europe, it's soccer, European football, the US, American football, baseball, and you see these 20-year-old kids making
Yeah.
millions of dollars, and you're just like, "Oh, what did I do wrong?" And it's like, "No, you didn't do anything wrong, they just happen to be exceptionally talented at
Yeah.
a sport or at something that pays a
Yeah.
lot of money," right? And I the flip reverse side of that is y you don't see it as much anymore because I think there a lot of the, pro sports leagues are really educating their athletes about investing, but you used to see it where,
Yeah.
a person would play a professional sport for years, and they'd have millions of dollars, and then by the time they were 40, they were broke, and you're like, what happened there, right?"
Definitely. Definitely.
You made $1,000,000 a year for 10 years, and now you're broke? How,
The biggest
right?
example is
Or
Mike Tyson. That has happened to Mike Tyson. The most
yeah, I think more
oh
than
no,
once.
oh no. But now my man is in the big weed business. Great, wonderful. It's been a great chat. I had a great pleasure, Dividend Dave. It's been really nice to meet you, see
Yes,
how you
thank you so
invest,
much, Matthew.
introduce myself to you and your audience, as well as to learn from you how you invest. And certainly, I look forward to do this again in the future.
Yeah, thank you so much for coming on and spending time with me. It has been
Yeah,
absolutely awesome. I've really appreciated your knowledge and in-depth insight. and I don't want to say for someone so young because these days a lot of younger people do have the knowledge because they have the information at their
Yep.
fingertips, right? You can, like you said, you can just go to Investopedia or any hundreds or thousands of other websites and just get the information,
Yep.
read, and just get started,
Yeah.
get on
Yes.
base.
Get on base. That'll be it can be the title of this podcast. Get on base. And the last thing I'll say on this podcast
Yeah.
will be get on base.
Awesome. Again, thank you so much for your time, and I really appreciate it. If you're still here and you haven't subscribed yet, you know the rules. You have to subscribe. It's been almost an hour. Hit the subscribe button.